Yo! Good afternoon. Hello, Wisdom, Dan, Mike, Dan, F, Elizabeth, Curtis Jr., Glyn, Giovanni, Powell, Terry, Amit, Lennon, Andy. What is good, guys? How are you all doing? Nice to see you all here. We are so back. We are so back. We're the backest we've ever been. Just posting TikToks, right? So give me 1 second. Hello, hello. Gabriella, Relaxing Rain, Ethan. What is good, guys? Curtis, we're so back with break even. We are so back. We hit a break even today. This is the trade we took so far. Canadian Swiss franc. We took it because we had the little AMD here. We had the daily, the 4 hour, the 1 hour were all bullish. This was a 1 hour fair value gap. So we accumulated, manipulated down, which is obviously bullish, formed an IFVG, which is bullish. Then we targeted this area. So what this little thing here says is we moved to break even when we took this fair value gap. So when we mitigate this fair value gap, we move to break even because we know if we come back down off of it, we're probably going to continue back up, right? Or back down like this right here. So this is what's happened. We got out the trade around about here, like a 0.1 loss, technically break even, but not actually. More back than Lizzo. But we're going to catch a banger today, alright? Gonna catch a banger today. So stay tuned. And like up the motherfucking stream, by the way. If you're hyped for the return of streams, if you're happy to be here, like up the stream. What do you think about gold? I think gold, we were looking for buys, but did not get it. Right, we needed an IFG here, we didn't get it. We could get one now though. We are bullish on gold, right? We are bullish on gold. This is me on YouTube, but I'm TJ Trading 2.0. I see you, man. No worries. What about USD CAD? Let's have a look at USD CAD. Ooh, this could be the move. We kind of got an IFEG inside of the accumulation, which is throws me off a little bit. And also the take profit probably be up here. 1.5, 1.6. That's not bad. That's not bad. If we stay where we are right now. What about the 5 minute? The 5 minute looks bullish as well. It looks more than happy to come up to at least here. Potentially up here. Yeah, the bias. Let's have a look at the bias. So the 4 hour. Yeah, the 4 hours pretty mixed. You could argue that there's a low here because of this odd candle out, which means there's a low. Because it's gone up, retraced, gone up, which we took out and haven't retraced off of, or after doing. The daily is bearish, definitely. The 1 hour is bullish as well though. So with these lower time frames being bullish, we could take that. We could take this, I think. Let's not rush into it. Let's not rush into it. But we could take this trade. Alright, we could take, let's not rush, but we could take it. UJ accumulate, need a good manipulation, and let's go. Yes, we do need a good manipulation. We've been accumulating on this for a while, and we need to accumulate that, and we need to manipulate down. That's annoying, but there is news in 20 minutes, as Elizabeth has just said, and Glenn has just said as well. There is news in 20 minutes, so we've got to be careful with that. We've got to look out for that. Basically, can't trade unless we see something like right now, which is USD CAD. $30-minute, 1 hour, everything is bullish here. This is a little bit close to news, and it's USD news as well. They are both speeches, so another issue is going to be, it's not going to be like, okay, boom, this is the data release, great, everyone reacts to it. It's going to be like, they're going to say a good thing, then they're going to say a bad thing, then they're going to say a good thing again, then they're going to say another bad thing, and it's just going to be overall back and forth. You know what I mean? So there is that issue. But man, this trade looks good. Oh, this trade looks good. Hard. This is hard. This is hard. This looks like a good trade. We've been asking for a banger. I don't think it's a banger. Like, it's not gonna go fucking, you know. But the R, yeah, exactly. The R is getting very low, so maybe wait after news. We will definitely slip into news. But the only issue is, because it's a speech, we don't know when it's gonna finish, really. Right, the next news after that is 4:40 p.m. So Forex Factory is basically saying it could run until then because it's a speech. There's been speeches all day, but these are the big ones. We've got Bank of Japan, Gov Bailey speech. Then we've got USD Fed Chair Powell speech. Right. The R is getting very, very low right now. It's getting to a point where it's not really worth taking it, like 0.95, not worth it at all. Like up the stream, guys. Like up the stream. You know how it is, the YouTube business. If you're new here, subscribe. Like the stream, more importantly. Helps get the stream in front of other people, right? So if you think other people should be watching this stream, like the stream. Let's get to the next one. This is not going to give us what we want. why are you bullish on gold right now? Short term, is there not space for it to be bearish? Short term, I'm bullish. Because we've just had a massive meltdown. So, short term, we want a retracement. Ooh, it's giving us a little retracement here. Not even worth it. You could take this. Everything is valid. Pretty much just the news, really, other than the fact we formed a fair value inside the accumulation. We'll leave it here. We'll leave it here. Like Euro JPY. We chose not to take this one. It played out again. That's 5 trades that we've seen. 2 of them we took, both of them were break even, and the other 3 were wins, and we didn't take them. After news though, after news, that'll be good. After news should be good. Where's the best place to track news? With these speeches, I want to be able to watch them. What, on Euro JPY? Yeah, the 4 hours bullish. 1 hour's bullish. The daily is bearish. We didn't take this because it went against the trade. It went against the bias. This one, there's no real accumulation here. And also the 15-minute has no bottom wick really, so we're not going to take this. You could take it though, let's see. We'll do it like this to act like we kind of took it, you know what I mean? But I don't think this will play out. This doesn't have anything going for it really. Looks bullish to me on higher time frames. I think you already saw that. Already replied to that one, haven't I? Yeah, I don't think we're going to get the ICT here. Right. Unless there's like a 1 minute trade, but that's just... Ooh, goes against the buys though, so nah. USD cards playing out. Josh, could you have done your TP to 1 hour 5 IGAP on USD card? Yeah, maybe. Yeah, I see no issue with it. It's a bit of a stretch though. If you can be asked waiting, fine. Glad we didn't hold on to this. Ended up being a load of nothing. USD/JPY looks like it's trying to manipulate up here, which is annoying because that goes against us. Euro USD, again, it's not really much here. Euro JPY, did that give us the IFG? No, it didn't. It could in the next candle though. But either way, I think we still got to come down and make this bottom wick really. A proper bottom wick on the 15. And we got news in 9 minutes. We got speeches in 9 minutes, which makes it even harder. Here we go. Tell you what I could do for you as well. Tell you what, we'll do this for you guys. Makes it easier for everyone then, because that way we can do this, right? How did I do it last time? So, how's that? What do you think about that? Because that way we can watch the release and look at the chart still. If you want to keep it, say keep it. If you want to get rid of it, say get rid of it. Oh man, this is playing out. I'll try to keep everything over here. Just this way we can kind of watch it as it happens. And then I can watch it too. Like I can just go over here and we can watch it. And then over here we can trade. And you don't have to switch things or anything like that. Keep it, go ahead. So begins in 4 minutes. Your JPY has respected that fair value gap. Gold is starting to go up a little bit. Adrian, how's it going? I don't think there's much here. USD CAD, we could have took that. Canadian Swiss franc, obviously that's just doing its thing. USD CAD, we could have took that. You know, took it before the close, but I mean, it's news now anyway. I think. Is anyone seeing any trades? If you're seeing any trades, let me know, and I can look at them for you. Because right now I'm not seeing much. I'm not seeing much right now. So, if you want me to look at something, if you've got something you want to share with everyone, now is the time. So also waiting to hear from this guy. I think we can you know, all do with a bit of practice breaking down a chart. Gold on the 15 look promising. It does, to be fair, in the next 1 minute. If we can close like that and then get something like this and then inverse that, that is pretty promising if you ask me. Let me just make sure this is the right thing. Yeah. This is definitely the right thing. Right, so 2 minutes, then the thing starts. So if you look to this way, that's going to be the Jerome Powell speech. Then down here is we're going to have the charts for you guys, right? Down here or here. There we are, down here. Yeah, so look down there, look down that way. That's going to be the charts. That's going to be the Jerome Powell speech. Yeah, there you go. that's going to be the charts, and that'll be the speech when that starts in like 1 minute. We're going to keep our eye on gold because this is probably the best setup we're looking at the moment. If anything else is catching anyone's eye or anyone's got any questions, now is probably the best time to ask them, because we're going to be waiting for Jerome Powell to speak here, and other stuff like that. Get the watch. Exactly. But like up the stream, guys. Like up the stream. Like up the stream if you like this little news thing here. It's not going to be here forever, you know. But if you like it, like the stream. Is Powell the guy who says good afternoon and everything goes down 300 pips? Yes, that is the guy. Targeting 1 hour fair value gap on gold. That is a good idea. That is a good idea. Bitcoin is consolidating, I think, right now. Check the 5. Yeah, we're just wildly consolidating right here. Probably waiting for Jerome Powell, to be honest with you. Bitcoin seems to get a little bit, it's gone a little bit mainstream. Oh, for fuck's sake. TradingView keep on changing their pricing, it's so annoying. This is probably the best bet. This is probably the best bet. Yeah, we're only on 20 likes. Come on, guys. Get these likes up. 30 likes at least. Come on. Like up the stream. Let's get to 30 likes. Checking the Instagram. Yeah, it doesn't seem to be much for Jerome Powell that I can see. So he mustn't have started it yet. This looks good though. This does look good. You know, this would be the trade, something like this. That is what I'd want to see. Come on, J. Powell.
About a lot.
There he is. That isn't him. Obviously he's testifying, so this guy's gonna like...
Committee on Financial Services will come to order. Without objection, the chair is authorized to declare a recess at any time. This hearing is entitled the Federal Reserve Semi-Annual Monetary Policy Report. Without objection, all members will have 5 legislative days within which to submit extraneous material to the chair for inclusion in the record.
That should be...
I now recognize myself for 4 minutes for an opening statement. Good morning. I want to thank Chair Powell for joining us today. We appreciate your time and look forward to hearing more about the Federal Reserve's outlook on economic and monetary policy. There's been a lot of rhetoric lately, particularly from our friends across the aisle,
is that audio
suggesting
good?
that Republicans in the Congress are steering our economy toward a recession. However, the facts tell a different story. 4 months into the Trump administration, American workers and taxpayers are already benefiting from a strong, resilient economy.
Yes, we would, to be fair.
Solid, and even former Fed officials have dismissed the idea of a recession this year or is near. Compare that to the previous administration. Under President Biden, Americans endured the highest inflation rates in decades, driven by reckless spending and misguided policy decisions. Now, under the Trump administration, inflation has declined to levels lower than those seen before President Biden's flawed so-called American Rescue Plan.
So,
and real wages are finally meaningfully growing again.
yeah.
There's always some economic.
We would want to invest this on the 5 minute.
Difficult negotiations necessary to secure more open markets.
We want an ICT on all time frames.
But that uncertainty is not without a strategy. A strategy of balanced, lower regulatory costs, pro-growth tax policy,
Pretty low are there.
and controls on federal.
We'll take this if we get it. We'll take it if we get it.
Trade successes offer economic opportunity. One Fed official, Governor Waller, has outlined how a balanced approach, combining potential tax rates with targeted tariffs, could foster strong economic growth. Let me be clear on that point. We can fight to open markets, break down non-tariff barriers while achieving solid economic growth at the same time. That's President Trump's goal, just as it was for President Reagan in the 1980s. I also want to commend you, Mr. Chairman, the Federal Reserve, for taking positive steps to keep politics out of the Fed, including disbanding 4 internal climate-related committees and making the Fed leaner and more efficient by right-sizing your workforce across the system. These moves reflect a commitment to efficiency at the Federal Reserve. I'm also pleased that Governor Mickey Bowman has been confirmed as Vice Chair for Supervision at the board. Governor Bowman has been a tireless advocate for community banks, and this committee is eager to work with her on policies that enhance our bank's ability to provide greater access to capital and services for our families and businesses across our nation. I look forward to today's hearing, and I yield back the balance of my time. I now recognize Mr. Foster on behalf of the ranking member for 4 minutes for an opening statement.
Thank you, and I will save everyone a little bit of time. Ranking Member Waters was unavoidably detained. I'll just say a little bit that the markets have kind of spoken on their confidence in the Trump economy. Probably the single simplest metric of that is that the U.S. dollar is down roughly 10%. Okay, this is not a small thing, and it has caused countries around the world to question the primacy of the U.S. dollar going forward. This is one of the worst market responses, I think, to the chaos that we're seeing, the tariffs that are very destructive to international trade, and just everything that the markets are seeing and trying to suffer through. I know my businesses in my district, manufacturing businesses that can't even start thinking about investing with the level of chaos just from the tariff policy alone. Anyway, there's a long set of.
This is pretty boring. But it's important. You got to listen to it. It's very important. You got to know this stuff if you want to be a trader. EU does not look bad. EU does not look bad at all.
Evaluate the state of the economy and review the FOMC's policy decisions.
I think EU looks pretty good.
Bank's performance and responsiveness to the economic conditions our constituents face back home. This hearing is particularly timely a conversation as the Fed wraps up its 5-year framework review, including a thorough look at the consensus statement, communication strategy, and other.
But the bias is bearish, isn't it?
Will have a profound effect on the lives of everyone.
Bullish on the daily.
Many of these topics we'll discuss today we've taken a closer look at in monetary policy.
Could argue it's bullish right now on the 4 hour. And bullish on the 1 hour.
One issue that I think warrants special attention is the binding nature of the SLR and ESLR.
But where would the take profit be?
I'm glad to see the Fed is looking into
This high over here? I don't see it going up there.
Chairman Powell, thank you for being here. It's critically important that Congress and the central bank have an open dialogue. Transparency, accountability, honest communications are pillars of our system's success. I look forward to your testimony on the state of the economy and the Fed's plans for the future. Now you back, Mr. Chairman.
Gentleman yields back. I recognize the ranking member of the Task Force on Monetary Policy.
Yeah, this is Jerome Powell. This is his walkout.
For 1 minute for opening statement.
Thank you very much, Mr. Chairman and Ranking Member, and thank you, Chairman Powell, both for your years of public service and for being
Better if I leg up an EU.
Since 1977, the Fed has been tasked by Congress with a dual mandate
Yeah,
goals
that's
of
true.
achieving both maximum employment and stable prices. Unfortunately, this administration has made accomplishing these goals more difficult. In the Fed's most recent summary of economic projections, we see a forecast for slower growth, stickier inflation, and rising unemployment, all of which point to a potential stagflation scenario. Whether it's the president's indecision on trade policy, his hiring freezes impacting the collection of economic data, his ballooning of the deficit to cut taxes for the wealthy, or his name-calling, all of these actions make it tougher for the Fed to do its job. I look forward to your testimony today, Mr. Powell, Chairman Powell, and I yield back with that.
Gentleman yields back. Today, we do welcome the testimony of Honorable Jerome Powell, Chair of the Board of Governors of the Federal Reserve System. Chairman Powell, we thank you for taking time to be with us. You'll be recognized for 5 minutes to give an oral presentation of your written testimony, and without objection, your written testimony will be made part of the record. You're now recognized for 5 minutes. Mike?
Thank you, Chairman Hill, Ranking Member, and other members of the committee. It's great to be back here today.
Also, I'm going to do something pretty. Let me
Let
just flip this.
The Federal Reserve remains squarely focused on achieving our dual
Oh.
mandate goal of employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The employment rate remains low, and the labor market is at or near maximum employment.
There you go. This is better now because when I'm looking at the charts, it looks like I'm looking at the charts rather than looking over there.
We are attentive
When I'm looking at this,
on both sides of our dual mandate.
I guess it looks a bit weird. But the charts is the main thing. It looks like I'm looking at the charts now. So,
Incoming data suggests
finally fixed that.
solid. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, reported a decline in sentiment in recent months and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged a moderate 224,000 per month in the first 5 months of the year. The unemployment rate at 4.2% in May remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total personal consumption expenditures, or PCE prices, rose 2.3% over the 12 months ending in May, and that, excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures.
Gold looks like it's pushing up.
Have moved up over recent
Gold is pushing up here.
reflected in both markets.
If we invest this, we can take that trade.
Respondents to surveys, businesses, and professional forecasters point to tariffs as the driving factor.
He is
Beyond the
pushing
next
up.
year or so, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual
Your JPY continuing down.
employment and stable prices for the American people. With the labor market at or near maximum employment and inflation remaining somewhat elevated, the Federal Open Market Committee has maintained the target range for the federal funds rate at 4.25% to 4.5% since the beginning of the year. We've also continued to reduce our holdings of Treasury and agency mortgage-backed securities, and beginning in April, further slowed the pace of this decline to facilitate a smooth transition to ample reserve balances. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Policy changes continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that would depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. For the time being, we are well positioned to wait to learn more about the likely course of the
Morning,
year
Marcus.
before considering any adjustments to our policy stance. To conclude, we understand that our actions affect communities, families, and businesses across the country.
Oh, look at that.
Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you, Mr. Chairman. I'll turn it back for questions. I recognize myself for 5 minutes for questions. Over the past few weeks, our Democratic colleagues have suggested the following: after the initial release of the GDP report, the president is driving the economy into a recession. Chairman Powell, the latest FOMC statement described economic activity.
I think they're asking him questions now.
Expand at a solid pace, and you just reiterated that in your testimony this morning. In your view, is the term recession and the economy growing at a solid pace, are those synonymous with each other?
I would say no.
And you know that the labor market continues strong, the economy's at a standard pace. And you also referenced in your testimony that first quarter GDP initial react was also from front-end loading, as you noted, imports to try to avoid tariff impacts. Also, I looked at the Atlanta Fed GDP Now model, which forecasts GDP growth for the second quarter of this year at nearly 4%, with core GDP forecast at 2%. Does that Atlanta model suggest a recession to you?
No, I would say it doesn't.
So, in looking at your remarks about tariffs today, and then the ones that you made during March and April, I was looking back at a Fed study that noted that up until March, tariffs have already been partially passed through in consumer prices, leading to a contribution of merely 0.1 percentage point increase in core PCE prices. And a Harvard study last week showed that prices have only modestly adjusted since the announcement of tariffs. Finally, the longer-term inflation expectations remain consistent with the 2% goal. Governor Waller laid out a pathway that allows for rate cuts, provided that average effective tariff rates remain close to 10%, or I assume he means 10% or lower.
Gold looks good. Gold is looking good.
Prices continue to disinflate. So given that data I've outlined, I'm sure data that you're very familiar with, for the economy to avoid persistent inflation, do you concur with Governor Waller that there is a pathway for good news as it relates to the regulatory policies, the tax policies that I discussed, in a world with lower tariff rates?
So first, I wouldn't comment on any other FOMC members' comments one way or the other, but I will say this. I think many paths are possible here, and certainly the one you mentioned is a possible one. We could see inflation come in not as strong as we expect, and if that were the case, that would tend to suggest cutting sooner. We could see the labor market weakening, and that would also suggest cutting sooner. On the other hand, if we see inflation coming in higher, or if the labor market were to remain strong, then we would probably be moving later. So I think a range of possible paths are possible, and certainly the one you mentioned is one of them.
In February 2021, you told us in this committee that you would stay in your lane and not comment on President Biden's proposal for the American Rescue Plan, or sharply increasing federal spending. And you said it was an issue, but that you would stay in your lane and not comment on it. But here in this year, you have commented on this idea of tariffs being set by the
Gold's reversed.
Views
doing its thing.
But a huge fiscal spending by the Biden administration not in your lane. Explain to the committee why you chose to be silent.
Loss avoided there.
But
outspoken this spring.
Sure, so we haven't.
Loss avoided here.
For us to comment on the policy of tariffs.
Loss avoided here as well.
We-
3 potential setups,
Just as we wouldn't
3 potential losses avoided.
that you're working on right
We're
now.
goated.
We're not-
That's a win in my books, to be fair.
Our job is
That is a win in my
inflation,
books. I would count that as a win.
inflation under control,
Obviously, we didn't make any money,
maximum
but,
employment,
you know,
and when policies
didn't
have
lose any money.
what appear to be short and medium term implications, meaningful implications for that, then they kind of.
Oh. What was that?
Inflation to make the dual mandate the sole mandate. We've talked about that before, but I was very curious about your thoughts on former president of Cleveland Bank, Loretta Mester's quote that I read from last fall. She says, "I think that maximum employment is the maximum level of employment consistent with price stability." In other words, she elegantly ties that together, that price stability is what you can have more control over rather than, all these other factors that enter the employment picture like legislative and executive branch. What's your thought about her quote?
I personally think that's a very reasonable way to think about it.
Thank you very much. I yield back. The gentleman from New York is recognized for 5 minutes.
Thank you, Mr. Chairman. Good morning, Mr. Chair, Chair Powell, and thank you for being here.
Good morning, Mr. Chair.
Last week, the FOMC decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. While I was not surprised by the decision to hold
What's happening?
presented a decrease of 0.3
Sorry, guys.
percentage points for GDP, a similar increase for core PCE, and an uptick in the unemployment rate to 4.5%. Can you explain the incoming data that the committee has seen since March that caused it to make
USD/JPY is manipulating down.
Sure, so, first of all, these are individual, this is not a committee forecast, these are just individuals.
Very polite acknowledging the chair.
Forecasts, and, we don't bless those as a committee. But, I think people are looking at the incoming data.
What bias did you have for UJ? I think it's bullish.
If you look at the
I
range,
can't. Yeah. Alright. We're fucking that off. Back to the charts. Don't know why that's not working. I'm sorry about that. Back to the charts. Back to the charts. Also no top wick on the 1 hour. There we go. This could be it, guys. This could be it. Falling off a cliff though. Wick tricky. This just fell off a cliff. Is anyone seeing any setups anywhere? I'm not seeing any. We took one so far today. It's been break even basically. GU shooting up. EU shooting up. This would have been full TP. This is just clearly the dollar moving because of news. Gold is like the only thing right now that I would want to trade, or we could still trade, but even that's looking bearish. Not much here, brother. Not much here. Oil is going down. I'm gonna see EJ buys on the 5 minute, but it's just took highs. Oh yeah, I see that. Would have took it down here as well. That's where it should have been took. Yeah, this is a mess. If gold versus this, markets are mad right now. Means there's going to be some good trades somewhere. If gold versus this, what would that look like? Because we take the trade here. We've inversed this one, we've respected this one, but we would have to come to these highs. Suppose if we invest this, we could take this to here and then just force it to go break even when we take that high, because what you could argue is that we've got to continue down. Once we take those highs, we're still respecting the fair value, so we would technically have to continue down. If we invest this, we have to come to those highs, then we can move to break even, and if we disrespect the fair value gap, we can then come to this one and do our thing there. That could be pushing it a little bit, but I mean, if we inverse it, could be the move. Could do this. Stop loss would still be down here, I think. Or it could be here. But it would be basically like getting into this trade a bit early. It would be the same trade, but just a really early entry. We could even just do this though, that's the thing. We could even just do that, or could even just target up there. Could even just target this, get 1.4 from that. Because that, I want you to understand the steps we've followed to get to that point. If we inverse this, we would then have, if we inverse it, remember that, we would have to come to these highs, right? Once we come to those highs, we haven't inversed this 15, we haven't inversed this, so we could technically just then continue down. So we'd move straight to break even there. And then when we come here, we could do the same thing. But if we're getting 1.4 off from that, we could just do that anyway. But we've just respected the 5, so that's a bearish sign. Do you know what I mean? So we wouldn't take this trade now because it looks bearish. Let's see. This is a 30-minute candle and a 15-minute candle. Still gotta wait for this close though. Alright, Eric, how's it going? It's great, thank you. GC sells. Ooh, yes, we'll take this. This is more of a big move though, more of like a move than a consolidation, you know what I mean? And this is a 30-minute as well. USDJPY. Oh no, we're leaving that one. Gold. Gold's my favourite, to be honest with you. Gold is my favourite right now. If we can get a close like here, we could take this, target these highs, move straight to break even when we do that. Because the IFEG is saying we've got to go to the highs anyway. So we just move to break even and then just hope for the best from there. That is my thought process. But we need a bit of a better close, like one down here. Because if we do it like this, we can't really take the trade because the risk to reward ratio is way too low. And the entry is too close to where we'd be moving to break even. GBP card could be, but let's see. If we can close down here, we can take the trade. If we close down here, we take the trade. If we don't take the trade. Okay? Yeah, there's nothing we can do now. Nothing we can do. Ooh. Could enter this. There you are. I took that, I'm in. But I haven't set anything yet. And I'm risking a little bit less because I just... Right. We need to come to this high. Yeah, I'm in on gold. Could be considered a bit of a push, like a bit of a stretch, but the bias is bullish. We've got to come up to here anyway. We have to come up to here anyway, right? Now I haven't set anything yet. I'm going to give it a little bit more breathing room because I've risked a little bit less, so I'd lose like not that much. It's not copying through. My thought process, right, on this trade, let's just break it down first so everyone's on the same page. It's a little bit of a weird one, but my thought process is if we formed an IFEG right here, we still need to come to this high, right? The bias is bullish as well, okay? So that's that as well. Now, if we do come to here, because we formed an IFEG, what's to say we're going to continue up, right? We haven't inversed any 15-minute fair value gaps, we haven't inversed this, we still haven't, you know, we've just took a high. So what's to say we're going to inverse this, this here? Well, nothing. So we've moved to break even straight away. Okay, so I'm basically betting on the fact that this IFEG is going to come to this high, which it should do, right? We can agree on that. We use it for our bias. It should do that. It hasn't right now, but it should do. So that's why I took the trade. Now, granted, I risked a little bit less. I don't even think it was 0.5%, to be honest with you, because I just adjusted it so that I could get into the trade, and it's dropping down right now. This is ridiculous. I mean, it could just be probability if this doesn't play out, because this IFEG should come to this high, right? That's a basic confluence we use for everything. Bit of a stretch, I guess you could argue that. It is a bit of a stretch. But we'll see how it goes. Talking about GBP card. Yeah, that didn't even give us the fair value gap. Alright, let's see what happens here. Let's see what happens here. Let's see what happens. Josh, out of interest, what would be the reasons you would have stayed out of USD/JPY? Just this here. And all this is pretty hard to come up past this, unless we do something similar to gold. Well, them fair value gaps just puts me off a little bit. Come on, man. Come on. Oh, my luck is ridiculous. Come on. Could this be it? Could this be the reversal? Did we cook with this? Are we cooked or did we cook? That is the question. It's gotta come and take this liquidity out. Come on. I'll get the bat ready. Need to invest this. .15 minute no bottom wick there. go. Now we got it. So if we flip again, at least that's a little bit more sustainable. There we go. We continue up now, a little bit more sustainable. Come on. Am I still in this? Yes, we're still in this. Right, now there's a high here, which, you know, could be where we target. I think if we tap that, when we come up to that, that's probably when I'll go break even, to be honest with you. When we tap this, I'll go break even there. And then we just let it run. I'm gonna get ready. What a comeback this is. It dropped since you said that, Dan. You jinxed it. Dan's fucking jinxed it. Nah, come on. Give us that break even that we need. Oh, fuck. This is fucking us about way too much. How the fuck did you predict that, Eric? You said that and it happened. Right, we're break even now. So worst case, we're break even. No more fucking about now. We want to go straight up. No messing around. No, oh, do I? You know, kind of. We want to go straight up. No fucking about here. Straight up to here. Come on. No. Up. Come on. Sip me juice. We're going back down. We took liquidity. Anyway, that's the main thing. Or at least we'll break even. Just gonna need some weird jump up now. Come on. Come on. That's probably me out. It's literally 0.01% away from taking me out. Yep. What a roller coaster that was. Can I just say? What a roller coaster that was. What the fuck has happened there? So we went so far down, so close to my stop loss, completely reversed, went straight up to the, like, basically the first target almost, then came back down. At least we break even, you know, at least we break even. A little bit of a weird trade that, I can't lie. Let's see what GC gives us. We didn't have A&D. We had an IFG and we had liquidity. It was just the IFG really, other than the bias. Buy side was the target. Time frame was on the 5. Rating probably like a B+. 0. Outcome break even. Of course it's reversed. GC is going to give us the IFG, did someone say? Oh wow, it just did. That is a drop and a half. You guys in this? I think I'm going to call it a day. What's the bias? Yeah, bearish. 4 hours bullish though, I think, isn't it? 1 hour also bullish. Yeah, I'm not taking. Could argue it's bearish though as well. But I'm not going to take that. I'm leaving that one. Now, what I do want to talk about really quickly is the YouTube, right? My YouTube channel. Look at these here. So I've obviously got rid of this one now because things have also took another turn. But this is lecture 1, lecture 2, and lecture 3. You know the live lecture series that we did the other week, the other month? I'm posting them all on YouTube. So if you missed them or you want to watch them back, that is the place to go. Lecture 1 is the most recent video on my YouTube at the moment. Lecture 2 and lecture 3 are all premieres. So they will be coming out on the 27th and the 28th. So on Friday night and Saturday night, lecture 2 and lecture 3 will be released. So stay tuned for that. But yeah, that's pretty much it, guys. It's been lovely. I'm liking these streams. We're back in that mode, back in the streams. You know, whatever. We're back, right? 2 trades today, basically 2 break evens, which is annoying, but at least it's not a loss. That gold trade was an absolute roller coaster. What the fuck? But that is it. Like the stream if you haven't already, and I will see you all in tomorrow's stream at the same time, the same place, for some more trades. Hopefully we can catch a dub soon. But yeah, thanks for your time, guys. Have a lovely rest of your day. Like the rest of this stream, and we'll leave it there. Like the rest of the stream. Like the stream. Go and watch these live lectures. Learn how to trade. Been a big stream today. We're back 1 hour 40 minutes. But like up the stream. I'll see you all tomorrow. Thanks for your time, guys. Have a lovely rest of your day, and that is it from me. Bye bye.